afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum here, and I am joined by Ken Shreve. We're going to break down a pretty interesting day in the market and some stocks with compelling chart action today. Ken, how's it going?
Hey, it's going pretty well. Let's take a look at Novocure, an oncology firm doing some very innovative things in the field of cancer. And in honor of strong earnings report from Darden Restaurants, we'll talk about Darden and another strong restaurant stock, Brinker International.
All right. Well, as always, we begin with a look at the major indexes. Here's a chart of the Nasdaq, which gained about a little less than 0.4% for the day. It was a day categorized by quite a bit of price discovery. The S&P 500 up just 0.3% for the day. The Dow up 0.2%. So even though we did manage to log small gains today, that those recent lows were tested. And what's your main takeaway from today's session, Ken?
Well, yeah, so we ended higher on the Nasdaq. The Nasdaq was up close to 1.6% intraday, so it backed off highs quite a bit by the close. But when we were talking about Monday's low, where the index, fell sharply and closed all the way up near its high, the Nasdaq came to within 1 point of Monday's low, and then rallied off lows. So the Monday low held. That's good. Still, seeing a lot of suspicious action out there in growth stocks. Leadership is out there, but getting harder to find. So we'll take this first up day as a positive and see what tomorrow brings.
That we will, but investors should still, as always, we've been saying, make sure you're staying in step with the market, looking at IBD's big picture and that market outlook, and looking at what the market's telling you. And right now, it is not a time to be aggressively buying stocks, even though we are seeing some glimmers of hope out there, but we're mainly just building our watch lists right now.
Yeah, I mean, the bottom line is you really want to, swim with the market tide. So when you're in a confirmed uptrend, that is really the easiest time to be making money in stocks when the market tide is flowing positive. We think it's kind of flowing negative right now. Doesn't mean that conditions can't improve quickly, but the market still needs to prove itself more. So we kind of look at the market as the market tide is flowing negative right now, which is just a much harder environment to make money in stocks. So we'll wait for market conditions to improve. It might not take very long, or it could take some time. But with the Nasdaq still below its 50-day moving average here, we could be in for a little period of consolidation.
Very well said there, Ken. Now let's flip on over to Novocure, NVCR. It did fall about 2% for the day, but it's still holding above that 10-day moving average, and it has seen just extremely strong gains as of late.
There are very few stocks holding above their 10-day moving average at this point. In fact, we're seeing a lot of sell signals by stocks, breaking through their 50-day moving averages. Names like Amazon and Apple, big technology leaders, really struggling. But Novocure is really just a pillar of strength here. You can see just a really solid move in recent days, and the initial breakout over a 79.73 pivot there, and then the stock, backed off a little bit, didn't flash a sell signal, and then really ramped up. Look at all the volume. Look at all the blue bars, the big up days and volume there. So that really points to a stock under accumulation. The fact that it really hasn't given up much gains as the Nasdaq has weakened considerably makes this a very strong stock, and could be a new leader when we get back to a confirmed uptrend. So this is a good one for the watch list. They're a real innovator in cancer and tumor work. What they do is they basically use electricity to disrupt cell division, and that inhibits tumor growth, which ultimately kills cancer cells. So very innovative technology here, profitable, and a lot to like about Novocure.
Yeah, so maybe in the early stages of forming a new base here. So we'll keep it on our watch lists for sure. And now we move on to Darden, ticker DRI. Moving on its quarterly earnings report, we had a gain of over 8%. Pretty heavy volume today here, Ken, which really stands out. But we did see some pretty gnarly numbers, I guess you could say, which isn't all too surprising for a restaurant stock during COVID. But investors sure liked something out of that report, maybe not as bad as feared, or the outlook.
Well, the sales not very good. Same store sales disappointed. Their overall revenue in the quarter disappointed, but they did beat the earnings estimate by a wide margin. They also gave pretty good earnings guidance for the current quarter, and then on top of that, they also reinstated their dividend of 30 cents a share. So there was a lot of good news in the report as well. But like you said, it's been a very, very difficult environment for restaurant stocks pretty much all year after the COVID-19 breakout. But this is a solid move for Darden today, and if we were in a healthy market, this one would still be in buy range. It cleared a little handle area right here, broke out over a recent high. We put the buy point at 94.85, so at 97.22, still in that 5% buy zone. But again, with the market in correction, you kind of want to avoid new buys and don't try to make money in stocks when the market tide is flowing negative.
That's right. And fellow restaurant, Brinker International, that one had a little bit of an upside reversal at its 21-day line today, gaining about 5.5%. So what do you make of the chart action here? It's been holding nice and tight after recovering a bit, retaking those moving averages, which is nice, and seeing that 50-day get back above the 200-day.
Yeah, I mean, this is another stock. I mean, totally different business, obviously, than Novocure, but a stock that has really been holding gains after a powerful uptrend. So Brinker is the parent company of Chili's. They also own a lot of Maggiano's Italian restaurants. I didn't mention Darden is the parent company of Olive Garden, but Brinker is another restaurant stock. The numbers are, not great. You can see in the second quarter, their revenues were down 32% year over year, but obviously the market is thinking these restaurants are hopefully about to turn the corner and get back into growth mode. And the fact that Brinker is holding gains with a really bullish relative strength line near new high ground. This is another, if you want to have some restaurant exposure, Brinker is basically telling you that this is one to watch, and technical picture looks very strong right now.
All right, great. Thank you so much, Ken, for that analysis. And you can check Ken out, one of our IBD Live panelists, our daily morning live stream where our experts are sharing their screens, talking about stocks that are setting up or actionable or ones for the watch list, depending on the market environment, which we also go in depth on our take on what is happening broadly with the market, helping you figure out the market direction. And at the end of the day, like you said, Ken, staying flexible, keeping an open mind, and looking at those signals for the market and its recovery. So we'll have to see what tomorrow brings us. But that is it for today, everyone. Thanks for tuning in, and we'll see you right back here tomorrow.